Your support and resistance indicators are probably lying to you. Most of them are built on flat and static levels, but the problem is, markets don't move in straight lines. They curve and shift, so those static levels are outdated the moment price moves past them. But imagine if your support and resistance lines could automatically bend and adapt with price, showing you exactly where the market is really turning. That's exactly what the support and resistance polynomial regressions indicator does. And in today's video, we'll walk you through exactly how the indicator works and how to set it up on your chart. Let's get into it. The support and resistance is found using pivot highs and pivot lows. The tool finds those points, but instead of connecting them with a straight line, it fits a curve through them. That curve is based on something called polynomial regression. Now that might sound complicated, but it's actually just a way to draw a smooth line that matches the overall shape of price. Here's an easy example. Let's say price makes a dip, then a bounce, then a higher low, then a move up again. If you try to connect those points with a flat support line, it won't fit. But a curve will fit perfectly. It follows the actual slope and turns of price. And then there's different regression types you can choose from, like linear, quadratic, or cubic. But you don't need to worry about the math. The indicator does all the work. You just pick the start and end points, and it creates the curve for you. Now, we'll show you exactly how to do that and how to pick the right curve for your chart. First, add the indicator to your chart. There'll be a link in the description below for free access. After you've added the indicator to your chart, you'll see two main prompts, one for drawing resistance and another for support. Here's what you should do. First, click on the chart to set your left anchor point. This tells the script where the data window should begin. Then, click again to mark your right anchor point. This is where the data window ends. This selection defines the price range and number of pivot highs or lows the script will use for the regression. Repeat the same for the support line. You can select the same data range or choose a different one if you want your support and resistance to reflect different market swing. Once you've selected your anchor points, you choose the regression type. This controls the curve's behavior, how tightly it follows the data, and how many bends or shifts it's allowed to make. If you choose linear regression, the indicator draws a straight line, simple and useful when price is trending in one direction. If you pick quadratic, the line can bend once, either upward or downward. This works well when price is slowing down or getting ready to reverse. Cubic adds more flexibility. The line can bend twice, which means it's great for choppy or changing markets with lots of movement in both directions. And if you really want control, you can use a custom polynomial function. This lets you decide how complex the curve should be, how many times it can change direction. But just remember, more bends isn't always better. If the curve is too complex, it might start reacting to noise instead of real price action. Once you've picked your type, the curve gets plotted on your chart. You'll now have a resistance line that follows your pivot highs and a support line that follows your pivot lows. Both shape exactly how you want them, but it doesn't stop there, because if you turn on rolling mode, the tool updates the curve automatically every time a new candle forms. That means your lines aren't stuck in the past. They keep evolving with price, always staying relevant. But now, let's actually walk through a live chart so you can see what these curves catch. Let's set this up together so you can see exactly how it plays out. Here, we're on the 5-minute Bitcoin chart. Step 1 is support. We click the very first pivot low in our view, then jump forward and click the most recent pivot low. The indicator grabs will automatically detect every low in between these 2 points for your support line. Then comes resistance. Same idea. Click the first visible swing high and the most recent swing high. After both lines are placed, jump into settings and choose the quadratic regression for each. This creates that smooth, natural curve instead of a straight trend line, and immediately gives us a better read on how price is behaving inside this structure. And this is where things get interesting. Price starts moving inside the range, and we can literally watch it respect both curves. Every time it hits the red resistance curve, we see sharp rejections. At the same time, price finds support at the green line below. Each time it touches down, it bounces cleanly, forming a bowl pattern. This is exactly how you can use the indicator. All you have to do is drop 2 points, pick your curve, and let the math do the heavy lifting, because price doesn't move in straight lines, and with this tool, your analysis doesn't have to either. That's all for today's video. The link for this indicator is in the description below. Also, make sure to drop a like, comment, and subscribe if you enjoyed the video. Thanks for watching, and until next time.